presentation to be doing here?
We talk about this every day anyway. So it's, there's no preparing. It's more just, you speak from the heart. You speak what's really going on, right, Oscar? That's what you've been creating.
Yeah, and back when we used to do physical conferences, I would get pulled on stage all the time, all different types of personalities on there. But, I reference Etan regularly with the amount of RegA Plus campaigns that you guys do. So, again, as soon as I saw the speaker graphic, I was excited.
All right, so we're ready. It's
11:30.
It's 11:30 on the dot. So let's get started. People are going to be starting coming in, but it won't stop us from welcoming everyone. So welcome to the KoreSummit Webinar Series 2021. My name is Oscar Joffrey. I am excited. Some of our panelists are just finding out, but that's okay. They know this inside out. We're going to be having a great conversation today about Regulation A. I mean, it's a hot topic for various reasons. And for most of you, the format is pretty simple. We're just going to have a discussion. There's no PowerPoint presentations here. As Etan said it best, we're speaking from the heart. We're talking from real experience, so you can, and of course, you can reach out to the panelists at any time. You'll be getting an email as well. At the end, we're going to leave about 15 minutes for you to ask questions. Put your hand up. There's a little button there at the bottom. And as well, just so you know, all these series are being recorded. They're available on the YouTube channel. They're available on LinkedIn and Facebook. So we're making it simple so everybody gets the pieces. So, but before we get started, I would like for our panelists to introduce themselves. So let's start with Etan.
Hi, Oscar. And hi, Jason. Etan Butler here. I am the chairman at Dalmore Group. We are a FINRA and SEC registered broker-dealer headquartered in New York. We were founded in 2005, and we specialize in assisting companies who are interested in raising capital online at scale. In particular, Regulation A has been a big focus of ours over the last few years. Currently, we are the broker-dealer of record on close to 100 RegA offerings, and we've been involved with many of the most successful RegA offerings in history, offerings that have hit their full offering amount objectives and are either now in the process of listing on NASDAQ or are launching a second RegA. It's a space that I personally have spent a lot of my time, have a lot to share, and we have a lot of experience. And I've been a close friend of Oscar's for quite a while throughout this process, and blessed and grateful to be here with you all.
Thank you. Jason.
Everyone, excited to be here today. I'm Jason Fishman. I'm a professional marketer turned investor acquisition specialist. I lead an agency, DNA, here out of Los Angeles, California. Since 2014, have worked on over 200 investor acquisition initiatives, starting with Reg D, going just at accredited investors, leveraging data partners from my ad tech background. Started working on Reg CF right out of the gate in May 2016, Reg A Plus campaigns for Test the Waters later that year, and then heavy in 2017. Have been focused on these type of capital raises ever since, and can go in depth in our discussions today on exactly how we build marketing funnels, how we drive traffic into those funnels, all the work we do to target the right audiences, to bring historical investment crowdfunding backers to the campaigns, as well as a spectrum of different accredited investors. We A/B test, optimize towards what's working best, and our clients are always asking us how to scale, how to hit higher levels. So can go in depth about some of the dynamics of those plans in our chat here today. And excited, 2021, a lot of things in the horizon here. So perfect time for this chat.
Perfect. Well, it's great to have you both. And even in a short notice, I like giving people short notice. It keeps their brain alert. But obviously the topic today is very timely, of course, how to raise your capital for Regulation A+. So, but before we get digging into the discussion points, I want to give everyone an update, because I don't know about you, Etan, or Jason, if you guys were pins and needles on Friday, but we were waiting for the final go. Most of you might have not known, but there was a slight chance that the SEC was going to delay the proposed new amendments. So we're very grateful that the the new administration has opted not to interfere in what the SEC has already moved forward on, which means that 15th of March 2021, mark that in your calendars, 15th of March 2021, Regulation A, you can now raise up to 75 million, and Reg CF, you can raise up to 5 million. So let's get started, because it's exciting to hear those news, but now everybody's curious, how to raise the capital. And there are many different ways we are going to approach this. Obviously, we have about 60 some plus webinars still and different bits and pieces. We're going to cover it as a whole, okay? So let's do that. And we're going to start it, from the beginning. So Eitan, you've always been there at the beginning part. Just walk us through the very initial steps from a company wanting to use RegA and then getting started from it.
Yeah, so we're at a very interesting time. It's a historic time that businesses are finally able to have alternatives to reach out on their own and raise money from really anyone over 18, as opposed to relying on ultra high net worth or venture capitalists or institutions. And at the same time, individual investors, average investors like us, are given the opportunity to seek out and participate and invest in companies that they feel might become the next big thing. If this was something that was available back in the day when Amazon and eBay and Yahoo and Tesla were going to market, and we took a look at some of these offerings and participated, it would be a quite interesting position to be in. So that exists today. With that, it's a very powerful time, and with that, there's a number of pros and cons that come along with that, right? Because for the first time in history, you have the ability for unsophisticated investors on their own. They're being advertised to, and they get to identify and research and select opportunities to invest in. In my opinion, if you look historically, most businesses don't work. They don't succeed. So it's very important for anyone who's considering investing in a Regulation CF or Regulation A to use your risk capital, to realize that, that not every business, that every startup, especially, that you look to invest in is actually going to work out. But at the same time, it gives you the opportunity to support businesses that are meaningful to you, brands that you feel a connection to, industries that you want exposure to. You get to become your own venture capitalist. You get to build a portfolio of exposure to different investment opportunities. So I think we're at a really interesting time historically for your average investors to be able to participate here.
Absolutely. And, Eitan did such a good job at breaking down the way these opportunities are now becoming available to retail investors. And February 2nd, 2021, retail investors are a big headline in the news. Everything that happened last week, Wall Street Bets and similar type of Reddit groups. In many aspects, as a marketer, it shows the power of community. Of course, I want everything to be compliant. I want everything to be for a fair market. But at the same time, you get the idea that a crowd can raise $75 million on a Reg A Plus campaign. When we look at Reg CF campaigns and have a whole lot of data behind them, which is why I'm pointing there leading into my Reg A Plus type analysis, it may be 1,000 investors to raise roughly $1.07 million, about $1 million, about $1,000 average investment value. Some of the rules are changing there. There's going to be the opportunity for larger investments to take place, where historically 107 across all Reg CFs was the rule. But now getting to see those operate more like a Reg A Plus, getting to see six-figure type investments taking place on a more regular basis. It could be a few thousand investors, it could be higher volumes, but you get the idea that with the right organization, targeting user owners, the actual customers of a brand. And we've done this for B2B companies as well, and seeing key clients play a strategic investor role in furthering that round. I'm anticipating a lot more of that occurring. It's certainly part of our A/B test, our variant test, to see where we're getting the best traction from our audiences. But speaking of 2021 further, 2020 was a huge year. We saw equity crowdfunding increase month over month from March through the end of the year. And December being a record month, not always the thing in the venture capital community. Meanwhile, the traffic, the conversions that were happening, 500 plus campaigns were listed on King's Crowd in December. You get the idea that the audience that's growing around this movement is just increasing. The awareness, the intent, the conversions, we're seeing repeat investments on some rounds. And I want to talk more about investor relations and how that plays a role once the first conversion takes place on these type of campaigns. But there's never been a larger audience than today of historical equity crowdfunding investors, and therefore opportunities for founders to get more traction in a quicker window of time.
That's interesting. Okay, so obviously Intel led it off. We started with the investors, so the crowd, whether it's the external crowd and the internal crowd, statistically speaking, they're coming out. COVID-19, we can all agree, the best catalyst we've all had. You know, there's a downside, but it's been great for the industry and bringing everybody online, forcing all of us to really ignite it, you know, in many ways. So the crowds are an integral part of having a successful raising your capital, recognizing that you're doing that. So that's one element. There's the investor side. So now to raising your capital, you need the regulatory side of it, right? Sure. So let's touch a little bit on that. And I just want to keep hopping it in elements so the crowd here listening in can see that this is an important element of the raise. You need that in and out crowd. Now you need the regulatory element. And Itan, you know, you're a registered FINRA broker dealer. If anybody understands that part, it's certainly your firm.
Yeah, you know, look, you know, why does a issuer hire a broker dealer, right? So first, it's to conduct your offering through a regulated entity that is licensed to make your offering available in all 50 states, to oversee the KYC, the Know Your Customer, the suitability, the OFAC checks, the AML, as well as the diligence on the offering itself and the principals, the officers and directors of the company, and also overseeing the diligence on all the investors. You know, it's but it goes beyond that. You know, the broker dealer has an opportunity to really assist with the capital raising, the distribution, and the advisory to help assure that you have a successful capital raise. Right. The way we approach this is that, and the advice that we give some of our issuers is that you really, you know, RegA is simply a tool that allows the issuer, right? And every company is different, and every industry is different. You could raise equity. You could raise. You could make a debt offering, right? You could provide yield to investors. You could provide fractional ownership interest in dedicated assets or real estate or collectible items. So so every situation is quite different. The key is to understand who you are and to leverage your strengths, like I said. So for a company that's a consumer products brand that has thousands and thousands of users or customers, this is a real interesting way to approach those customers and give them the opportunity to become investors as well, right? And once they become investors, there's a whole nother level of loyalty to the brand. You know, so again, each situation is different. Whether you're raising equity or debt, or whether you're a series issuer looking to release, you know, dedicated assets and offer fractional ownership participation in them, each one is very different. The other area that we've been focusing on is something that I call digital distribution. I think we may have coined the word, and what it means is that when you look at how broker dealers and investment banks typically handled syndication, an issuer who was looking to raise capital would hire an investment bank that would be their lead broker, right? And their job would be to raise capital from their contacts or from their customers, and also to approach other broker dealers or investment banks to build a syndicate, right? To leverage everyone's resources and skill sets. The RegA digital distribution is a bit different in that people aren't calling their investors with $1,000 investment opportunity like they would be with a Reg D that may be a $100,000 investment minimum, Instead, you have established marketplace platforms. Companies like Start Engine and Seed Invest and Republic and WeFund are excellent platforms that have done a great job in spreading the awareness and building up a growing network of investors that are interested in viewing and participating in vetted opportunities. Dalmore's approach has been to offer the issuer the ability to have their own independent page at a low-cost commission where they could direct all of their friends and family, their promotional efforts, their advertising, and even to direct some of the institutions that they may meet, that they may know, who could go directly to their page to participate, while at the same time, we give our issuers the opportunity to get listed on some of the premier marketplace-oriented platforms and put them on a commission-only basis, right? So you kind of get the best of both worlds. You get your own dedicated landing page where you could direct all of your promotional activities to, but you also have the opportunity to list your offering on some of the more established marketplace platforms. And some of these platforms now are boasting 500,000, potential investors, up to 1 million investors. And that's pretty profound. So I think the industry is growing, and I think we're always looking for cutting edge distribution strategies that we could offer to our clients as well.
Okay, so obviously from a broker-dealer side, being one of the items that you need in order to do your offering, and in your case at Dalmore, you guys are bringing a little bit more than the typical BD does, which is it's the compliance, but there's other elements. And as you noted, it is evolving. I think we are going to see something very interesting in 2021 because of the increase, but there's some other elements as well that I want to make sure it's covered here for the audience, and that is that want to make sure that everybody touches on that. Along with the broker dealer, you are engaged with a lawyer who's doing. I know we take it for granted that people should know this. It would surprise you how many people still think that they can do it themselves by copying a filing from somebody else. No, it doesn't work that way. Having a lawyer is a critical piece, as best practices. Having a broker dealer, some would say, well, I don't need it. Well, we are of the other opinion that you do need it, because today there's 7 states that don't allow you to sell it directly, and maybe there could be more, but what better protection for you and your shareholders than to have a broker dealer to be there alongside to make sure that your advertising, your marketing, that you're working with Jason is being done according to the regulations. But as well, there's other regulated pieces that go along with that, that offering that are needed as part of, your raise, such as having an escrow provider that will work alongside with the broker dealer. And then of course, an SEC registered transfer agent that again, so as you're noticing with all of this, the crowd, that inner crowd that Eitan started with and Jason alluded to, is that the inner crowd it's your team, it's the people that you're bringing together for your offering, and it just keeps growing. It starts with one person, 5, 22, 100, 1,000, 100,000, and keeps growing. And then of course, the piece that everybody's interested in, of course, in how to raise RegA, it's got to be the marketing, it's got to be the investor acquisition, it's got to be. I say those parts are important, but if you don't have these things don't happen. I'm blunt about that, because I've had too many companies that come into the door and I want to do a RegA. Just introduce me to Jason. Well, who's your lawyer? Who's your BD? Well, I don't really need that. Okay, well, I don't want to be the risk taker. So we have a responsibility now that it's come upon us as an industry. So, but let's touch on that part now, because it's the hot topic. So you talked about it, Eitan, initially about the inner crowd and the external crowd, but there are other ways that companies are utilizing to raising their capital that have been successful without going to, and of course, Jason, I'll come bring you right back on that.
Yeah, it's what we're seeing is, originally, in 2017, 18, there was a perception amongst some of the venture capital firms, and that could we really treat a company seriously if they're going out and raising money from non-sophisticated investors, and they have thousands of investors who put small investment amounts on their credit cards in the offering. There was a concern about perhaps the quality or the reputation about getting involved. I think that's changed significantly. I think there's much greater adoption. I think we're seeing the sophistication and the quality of the issuers have been increasing over time. Dalmore has a large portfolio of publicly traded companies, companies that are listed on OTC markets that are trading on NASDAQ. We even have a few New York Stock Exchange listed companies that are signing up to run RegAs with us right now. And we're seeing interest amongst venture capitalists as well as private equity firms that want to participate in RegAs. Right. So again, in the beginning, the concern was, hey, wait a minute, issuers could take advantage of the fact that they're going out to the crowd and they don't have to go and convince a venture capitalist to invest. And as a result, we're going to put a very high valuation, right? Because someone who's putting in a few $100s might not care or understand what valuation means. Okay, that might be the case for some, but that's not what's really sustainable. What's really sustainable is to create an offering and to have integrity with it, to realize that you're raising money from people that work very hard for that $500 that they're investing in your offering, and you have an ongoing relationship with them, which is why you need a good transfer agent, Oscar. Right? You need some. You really need to take that part of it seriously. A couple examples. We have one of our series issuers who just received a commitment from a private equity firm to invest 5% of every asset that they release going forward. That's interesting, isn't it? I mean, 5% of every single deal that they do, they're committed to. We have a company, Gage Cannabis, that just completed what I think is certainly a record breaker for Dalmore. They raised the full $50 million in 3 months. 3 months. And out of that 50 was over $20 million of institutional capital at the same terms of the offering. Right. So when you have an institution that puts real money into a deal, that gives confidence to the retail investors to follow that. Right. That's an entry. And I think we're going to see a trend rather than have a Reg A or a Reg CF that has a ridiculous valuation that you're going out to the average investors on the one hand, and then run a parallel Reg D that has more realistic valuation or terms that you aim to go to institutional investors. The right way to do it is to have a fair valuation, and that way you could bring institutional investors and customers and clients and retail investors into one. We have a number of private equity firms that have contacted us and are now investing in many of the publicly traded Reg A issuers that we're working with as well. So we're seeing more and more institutional interest as well. We're seeing more of a need now for companies that have plans to go public, that are getting listed on NASDAQ right now, that are looking to us as a broker-dealer investment bank to really help them from $1 through a Reg CF or Reg A, all the way through a successful Reg A, secondary market, trading and liquidity, all the way to listing on a public market exchange. So it's evolving. It's evolving quickly, and it's been very exciting for us.
That's right. So Jason, I mean, you started talking about when we started early on about, obviously we've had a lot of success with online investing that 2020, even with COVID-19, and obviously it's superseding even some of the venture capital, but we're not here to pick on it, just capital's capital moving forward. But obviously the techniques and the approaches that have been done, let's talk a little bit about that, because obviously, Eitan is talking about it from a broker-dealer perspective. Now, how does that all tie in together from an issuer when here you're not a broker-dealer, you're working to bring that success to the company that has a broker-dealer behind it?
Yeah, absolutely. And to start, can agree more with you guys. Legal, broker-dealer, transfer agent, that's where the conversation needs to start. I'll get asked those questions at times. It's real easy for me just to say, hey, that's not my lane. You need to talk over there and get the right rules. Compliance is number one. But from there, putting together a marketing strategy on how you're going to build that crowd, how you're going to engage that audience. Picture 17 touch points to get to the points of the funnel where you could see an investment. We use these tools for the conversations that would take place with an accredited investor, institutional money. By the way, amazing to hear that story. Full 50 million, 20 million led that type of lead anchor investor from institutional capital, how powerful that is in terms of social proof. I know that goes back to reward crowdfunding, and being able to have a portion of the round already committed says something very loud, and have used analogies like an empty restaurant sensation. If there's no meaningful capital in the round that's showing publicly on an offering page, or if it has strength in numbers and that line around the block type of feel, and how that attracts retail investors. But even in the institutional world, even the VC community, I would always hear about anchor investors and how that validates the deal. So, going back to the strategy, you want to take all that into account. You want to understand the marketplace, the competitors, the other groups in your vertical or of similar type of offerings, and how they're obtaining digital market share, how they're bringing on investors today. Success leaves clues. And I can tell you, things are happening much different here in February than they were in August. We never had the word clubhouse in a marketing strategy in August. So you want to see how it's being done, which mediums, how things are moving along before even building out the framework of your plan. I then get into audiences, marketing channels, and creative, who you're looking to reach. I break that down at the persona level. I want to make it a person I could call by name to symbolize that audience, and get a better sense of which channels are really going to influence their decisions. How the creative is going to resonate with them, making it real, having understanding of everywhere they go online so you can have a presence there. Building out those marketing channels, determining the messaging, determining the video, the imagery that you're going to use. There's different rules to be compliant there as well too. Tombstone type information is common. If you look at advertising creatives for this industry, there's a lot of similarities where there's a summary of the company in a sentence, then 3 bullet points underneath. Invest in the future of this industry, or follow this many investors, this much capital raised, is commonplace for that type of messaging. But whatever you roll out with, you want to let the analytics confirm what's working. Assumptions, one thing. Spent a lot of time in 2015 talking about how investors would react to Reg CF campaigns online. The analytics are a completely different thing. So as you're actually seeing the reports, as you're seeing the impressions, the clicks, the conversions, and how that algorithm flows from any marketing asset that you're putting out, you could start to gauge, hey, if I spend here, I'm getting more of this traffic, it's returning at this level. It's not always about the cost per acquisition of each investor. That may be more applicable to a retail investor conversation. If you're getting a higher quality, if you're getting institutional type inquiries, VC angel investors who are participating at much higher levels, you may be far more comfortable paying for a lead than an investor acquisition, but knowing the quality there and how those conversations progress, and how you could be at the end of the day seeing a much stronger return. So having laser focus on the analytics, letting that tell the story, and determining in real time where to go from there is huge. I mention advertising a lot because it's so scalable. If I see something working, I can increase it 2x, run it for the next 3 to 7 days, get twice the amount of traffic, maybe twice the amount of conversions, somewhere in that range, and continue and continue and continue. It's a strategy that's been used time and time again in Reg CF campaigns where budget may not be huge, but we still do it to some level on Reg A Plus campaigns, still at a much higher volume than Reg CF, but a higher starting point, and then increasing once we see performance. It's a more comfortable conversation for all sides of the table, by the way. The agency, the issuer, being able to roll it out to higher volumes of investors, all sides, once it's working, is very commonplace. We do some direct outreach as well. LinkedIn is an underrated platform for that. Have all types of recommendations on what virtually any professional should be doing every day on LinkedIn, and how that can fill your calendar with whoever you're trying to reach, whichever type of investor for issuers or partner they're trying to put together. And through a combination of those approaches and a plan, we're able to come out of the gate. The one other thing I want to add is, as Oscar's talking about the crowd and how the crowd's growing, as large of a crowd you think that you need to pull in retail investors to complete a round, I don't care if it's 1.07, 5 million, 50, 75 million, it's typically more. If you're looking at average investment values for Reg CF, or even a lot of the Reg A Plus campaigns and on some of the portals that Eitan was mentioning, the average investment may not be that high, and average conversion rates certainly are not that high. Just to give you an idea, 100,000 visitors, 100,000 prospective, we'll just call them retail investors for this conversation because the accredited investor average investment amount can change up so much. If you're getting 2,000 completed investments from those 100,000 visitors, a 2% conversion rate, that's good. By digital standards, that's a strong conversion rate. The point of this is you need a whole lot of traffic to produce a decent amount of interest and a strong enough, an effective amount of investors. If we're going back to that $1,000 average, 2,000 investors, we're only at $2 million. There's all types of tactics to stimulate peer-to-peer marketing from there, second investments, back to investor relations, being able to get higher trust and therefore higher amounts from that. I could come up with a bunch of tactics to turn that into 5 or 10 million, but you get the idea. A lot of traffic to produce a decent amount of performance.
Perfect. Sorry, I was on mute. I was ready to go there, but you were on a roll. And that's interesting. You know, obviously we're evolving this conversation with the investor acquisition to be a little bit more methodical now, because there is another element that's being tied in, and it'll be interesting to see as more companies come in. I remember in 2012 when I first wrote the book on equity crowdfunding, I alluded in one of my chapters that any company doing any form of crowdfunding, whether regulation A or CF at the time, was come in prepared with 30% under your belt. It was the rule of 30. And because at that moment, all we had was that if a company had 30% already under its belt, it could actually begin the process. But it's interesting, over the years, we don't talk about it anymore. We're just leaving it aside. We do know the platforms are asking companies to get that on their own before they get behind it, in a quiet way, of course. But it's interesting, we're back at it again. And part of it is because I think a new form of investors coming in. An investor that typically in the past would have said, this is that crowdfunding stuff, kid stuff, I don't want to have anything to do with it. No, I think now they're seeing, wait a minute, there's some real company opportunities that we didn't get involved with. So now it's even more critical that that strategy that some entrepreneurs might have not even thought of, where I want to raise my capital, I budgeted for the money for all the investor acquisition, and no, I haven't spoken to anybody on this side. And maybe that's another element we need to add now. Start talking to those private equity groups that are investing in your space. To your point, Ilan, that it's important for them to see how that all fits in, because we haven't seen it before. And that's part of this movement that's occurring right now. It's changing. That's why this discussion is going to continuously keep moving forward, because something else is going to be coming in. So there is one question I have for the both of you. If I put you on the spot, I don't mean to, and if you don't know the answer, that's fine as well. You talked about advertising. There's a lot of discussion about advertising in two different forms. So obviously, digital form, meaning online, we know the SEC has no issues with it, but we can't disregard the biggest audience in the world, which is television. So first of all, Ethan, have you dealt with it yet? Have you been involved with any issuer that's been doing television advertising?
Not that I'm aware of on the television side. We were asked a few times. My compliance team would be better suited to answer that, because it's a technical discussion. It gets pretty in the weeds. But we would, when we've been approached in the past, and whenever we typically defer to our securities counsel and our internal compliance. But it's not typically done on television. This is 2021, right? Everyone's looking at their mobile devices and their computers now more than a TV, because you have more controls, right? You could click on something and you could follow something and you could see the appropriate disclosures and disclaimers and read the 1A, where it's a more challenging process if that shows up on TV or on the radio, right? So I think we're
podcast.
Right. So we're, certainly we want to make sure from a compliance perspective that the investor has full access to the appropriate disclaimers and disclosures, and is encouraged to click on the 1A to read the background on the principles, read the business plan, read all the risks and disclaimers and disclosures that the issuer is required to make. That's the appropriate way for certainly for an unsophisticated investor to go through a decision-making process to consider investing their funds, right? So it's not something we're seeing much of on the TV side.
Jason, yourself, are you?
Yeah,
what about you?
I agree with Etan there. I could tell you we do have a RegA Plus campaign that's in planning. Test Waters is about to roll out, and they are going to be doing broadcast outside of us. In fact, it's on our specialty by any stretch, and subscribe more to the digital school. And for 2021, as Etan's speaking to, there's a reason Facebook has to limit political ads. And, it's such a powerful medium. I can reach someone who backed a deal on a specific portal at a specific household income level and has an affinity for a given industry. They're passionate about it. I could reach just that audience with digital. We also have access to connected TV broadcast on digital devices. And we access that programmatically. Fancy way of saying there's a software that uses machine learning across remnant inventory, unsold inventory across, thousands or more publishers. And we could choose the channel that we're advertising on there. I know it's been very successful. I think Nightscope and even Start Engine used it for their RegA Plus campaigns. For me, it's all about building out that strategy, looking at channel allocations, then setting up tests to see what's going to perform best. Historically, broadcast would be more on the branding side of advertising versus direct response. It could be built in a direct response commercial, but as Etan was saying, you're starting to cross the line there in terms of how hard you're pushing it. So if it's done the right way, some would argue TV is built to sell advertising. And if you look at some of the shows that go on through the day, it's to keep you tuned in to see the next ad break and being able to get those media budgets secured. And you look at the numbers behind it, it's the revenue model. But for us, Facebook, Instagram, advertising has been the strongest channel. Google can be hit or miss. There's about 5 other channels that we could use. We like to be able to place pixels. The pixels allow us to retarget people who come through. They also allow us to track who comes through and completes an investment, as well as the transactional value, so we can measure return on ad spend type of setup, where channels that don't include that, such as broadcast, there could be a code typed in, but there's a lot of holes in the analytics, and it gets much tougher to optimize and scale from there.
Okay. So it has been a discussion. I think we're going to hear more about it. And to Etan's point, it is a compliance, and more importantly, it's a regulatory element. And I think we need to be aware of it, because some audiences, it's really well suited for certain companies. They go, it's where my audience is. I want to get at it, and how do I leverage it? There is a way to leverage it. From the advice that we've been provided from counsel has been that a company can utilize this process, but only before their offering goes live. Now, this is really an interesting point, that paying attention to. So what Etan and Jason have been alluding to is, when you're putting out the strategy, raising capital, it's not like you go live day to day, that's when everything starts. There's a lot of things that are getting done way in advance. I'm sure your program, Jason, starts 60 days in advance. And I'm sure Etan is talking to potential, investors way in advance of your offering, without obviously disclosing any information. But advertising on television is one that we are now going to see. And again, to Etan's point, is that you cannot advertise the offering, because you cannot make the offering available to the investor at that moment. That is the one thing that the SEC is black and white about, is that, so digital media is the best, but there is a way to use it prior to your offering. And the question is, what are you going to advertise? Well, you're not advertising the offering. So you're really building brand. And I'm glad you said that, Jason, because it is something people tend to overlook in all this, is that while you're doing your capital raising, you're building a brand awareness. You're not just putting money out there for the capital raising. This raising your capital for Reg A comes with a lot of great benefits. Obviously, you'll raise your 50 or 75 million. That is without a doubt a wonderful thing, but you're getting something else as well. You're getting a brand awareness that often you do not get with other capital raises. So I'll give you an example. If you did a Reg D, a credit investor raise, you raised 75 million from 15 people. That's it. You put it out there. It's that. You raise 75 million from 40,000 people. That brand, it just reached that many people that could touch on to 10 other people for your brand. So you're getting a very free element that most of us have not wondered. And part of your strategy on how to raise capital is to deal with that crowd. So we've talked about the crowd side. I want to finish off the last 5 minutes into, now that you completed that round and you've been successful at it. I mean, on average, what we see is anywhere between 10,000 to 50,000 shareholders, new holders. And there are companies who are, I know they're going to do it again, and they're going to be able to do it successfully versus those that don't. And it really comes down to the strategy at the post element side. So, I mean, I don't know what role you're playing on that, Eitan. Are you providing any guidance to companies? Part of your strategy of raising your money is you need to have a plan afterwards. Is that part of it for you guys?
Well, yeah, I think each company is unique, right? So you have the series issuers that have their own apps and they're looking to build communities of investors and constantly release opportunities for investors to participate in fractional ownership interest of unique assets like sports cars and Michael Jordan rookies and racehorses and Lamborghinis and real estate. So we're seeing an explosion of that. Their model is to build up a loyal base of consumers, of investors, and constantly release more and more opportunities for them to participate. Some companies use Reg A in conjunction with wanting to become publicly listed. That is their end goal. Right? Some of them just need a certain amount of growth capital to make an acquisition or to pursue their business objectives, right? In either case, they need a solid transfer agent. They need good shareholder communication, and they need that to be as seamless as possible, which is why we at Dalmore really enjoy working with KoreConnex. Because you guys are really you're an example of a firm that is innovative and really on the pulse of that, right? And so, that's really, sometimes it's simply a matter of us playing our role to facilitate a successful capital raise, and then pass it over to Oscar and KoreConnex, and you handle the shareholder communication going forward. Some issuers have an interest in secondary liquidity, right? And that's something that we were talking about for years. Not everyone cares about it, right? Not some folks don't, but more and more people do, and more people will. And more investors are going to start to really expect that now that it's a thing and now that it's real. Right. So Dalmore, we're not an ATS, but we have partnerships with a number of broker dealers that do run ATSs, and it's a real thing. There actually is secondary trading going on for these assets, for these investors. Similar to what they would expect in the public markets, right, where there's a bid and an ask on those securities. It's particularly meaningful and important for fractional ownership interests, right? Because when you're buying a $30 position in a Michael Jordan rookie card, you really want to be able to sell that, if you can. Whereas if you're buying a $1,000 investment in a cannabis company that's a startup that might become something spectacular down the road, you might not be thinking as much about secondary liquidity today, but it's certainly a wonderful thing to have if you can. So I think that, every issuer is different. Again, Reg A is, most people look at it as it's a way to raise money online. It's way more than that. It's the ability for issuers to take a equity or debt share class structure and offer it to the masses, right? That's really what it is. It happens to be done online. But it's not just like Kickstarter and indie, it's not just like what people think about an online thing. It's a real investment with real investors. Similar to a Reg D investment. The only difference is more people can participate, right? So we have to always remember that, and that's really.
The numbers really make a difference on your strategy. And I do agree with you. Now that we do have secondary market, the responsibility is even more critical. And where I was really getting to is that companies do so much work in the beginning to do their capital raising, communications, social media, and all that. Then their deal is done. They've raised their money and they stop. And that breaks my heart. It breaks my heart because those people that bought into the story, they bought into the communication. They felt, wow, finally something different than what the public companies do. And I want to make sure that we finalize that commitment here, because secondary market, I agree with you, Ton, 100%. We see it. Not everybody wants it. No, it's not about whether they want it. It's a feature now that is there. And if you don't offer it, they're going to go, why don't you offer it? That's all it means. It doesn't mean they want to. If they really believe in your company, they will stay with you, because I've seen it. I got a client right now that has had shareholders for maybe 4 or 5 years. They're not going anywhere. Mm-hmm. They love the story. They're embraced in it, and they're communicating to them as if they were clients. And I think that's the big part. I think that part of the capital raise, how to raise capital, is understanding the whole scope of it. The time started really, really interesting. Make sure you understand the crowd that you're bringing in. Make sure you understand how to nurture. And then we start bringing in your advisors or the partners, the broker dealer, the lawyer, the auditor, the transfer agent, the investor acquisition firm. That crowd gets really big. There are some meetings, I don't know if you've been in them, guys, but there are 22 people in a video call with one client, because we're all in it together. We all want them to succeed. Mm-hmm. And that journey for them is critical, that everybody's on the same page. And then that extension is just getting started on the other side when the holders start coming in. So I think it's really exciting what's about to emerge. I'm looking forward to 2021 from the perspective that I think we are going to see a different modeling for accessing investors. We know it's there. We know the dollars are there. We know that people are there. The question is, all these different techniques plus these additional approaches are going to further enhance the offerings, and again, just really open it up. I really believe 2021 will be the year where a banker underwrites a RegA deal from top to end. They just take it, boom. And that will be a game changer. That will, whoa, what just happened there, right? Where right now, there's still, it's still 70-30, right? 70% the company needs to do the heavy lifting to get that 30, but that's okay. It's better than where we were before. And in the early days where there was a lot of ambiguity around this. So I'm cognizant of the time, and obviously we have a number of attendees here this morning. Obviously, I'd like to leave this portion. Oh, hands are coming up already. To ask questions, keeping in mind that obviously some of you have attended other events before, we're going to give everybody an opportunity to ask your questions from Jason and Itan here. All right, Tom, you're on.
Hello, everyone. Thank you for this presentation. Very interesting, especially in light of the regulatory changes. On that front, I've heard some discussion of the results of the change in administration on this regulation that just came through and was just published to increase the amount that we can raise from RegA Plus to 75 million. There's a regulatory freeze now that the administration has put in place as of last week, and there's some discussion that regulatory freeze could impact this rule change because the new administration could pause or maybe even change that rule change as part of this regulatory freeze. So I wonder if you have heard anything about that, have any opinion on the likely impact of this regulatory review on the recent rule change.
Great question, Tom. So you probably missed the beginning opening. On January the 29th, the SEC met and at 11:38 a.m. Eastern Standard Time. It's official. They're not freezing it. It's moving forward. And it wasn't a freeze to the SEC. It was a freeze to all the agencies. The SEC did not fall into that. So full speed ahead on RegA for 75 million. Full speed ahead for RegCF for 5 million. So no more roadblocks getting in the way for your capital raise. All right, next, Alejandro, here you go.
All right. Good morning, Alex Ochoa. I'm CEO of a publicly traded company in Canada, and my question is, since we're let's not say dual listed, but since we are traded on both exchanges, and I'm fully reporting with the SEC, would I also be able to, comply with a RegA or the CF, or would I have to definitely change the primary listing from Canada to the United States?
Eitan, it's yours.
Well, I usually have our compliance team respond to questions in case I miss anything, but it's my understanding that both Canadian companies as well as U.S. companies qualify for running a Regulation A offering, whether they are public or private. But again, I want to be careful because you had a couple details in that question that I would like to run by my compliance team. If you could certainly reach out to me and I could get a specific response to you. But my understanding is that you would qualify.
Yeah, the only thing I'll add there, a Canadian company cannot use Regulation CF. So we just need to, and creating a subco, Sarah Hanks wrote in a blog, you can go to our blog, it's all about foreign issuers, in particular Canadian companies, creating this holdco in the US using Reg CF and then doing a Reg A. It's the suicide. It will kill your Reg A going forward. So, but Eitan is correct. A Canadian and US company can use the regulation. You don't need to form a US entity. IFRS statements are applicable. You don't need to convert them to GAAP, which is really great. And you still need to follow all the rules, the same regulation. But the only regulation accessible to Canadian companies is Regulation A+. All right. So Francois, I'm bringing you in. Sorry, Jason, did you have something to add to that?
Sure. Yeah, just one sentence. We've worked on campaigns where we had to target different audiences for Canada and US, and they were going through different portals. As Eitan's mentioning, for compliance, I say the same thing. We're just marketing it once it's set up, but there is a way to do it. And you can build separate funnels, target the different audiences, and make sure everything is following the rules from there.
Perfect. Thank you. Francois, you're on.
Hi. I'm a complete novice to all this subject, and I'd like to understand a little bit more about the basics, basically. You spoke about Reg A, C, F. What are the respective minimums and maximums for each of these methods?
Eitan?
Right. So currently, companies are able to raise up to $1,070,000. U.S. companies are able to raise up to $1,070,000 through a Regulation CF offering from anyone over 18 years old. And that is going to increase to up to $5 million on March 15th. That's Regulation CF. Regulation A, or Regulation A+, it's often referred to, allows for companies currently to raise up to $50 million. And they could be both US companies as well as Canadian companies to raise up to $50 million from anyone over 18. And that is going to increase from $50 million to $75 million on March 15th. That's the maximum. There's no minimum, right? And as far as the minimum investment amount, that is up to the issuer. We have issuers who have $100 minimums on a per investor on the investment side, and we have issuers that have $2,500 or $5,000 minimums, right? And that really depends on your strategy. If you're a consumer brand and you have tens or hundreds of thousands of subscribers or users, and you want to make it the threshold easy for your average subscriber or user to participate, you might opt for the lower size. If you're more of like a business to business company, and with a different type of a demographic of investor, you may opt for a slightly higher amount than that.
Perfect. Thank you. Jason, did you want to add to that? I mean, or we got it covered? Got it covered? All right, Trung. Trung, you're on.
Hello. Hey, guys. How's it going?
Good.
I had a question about, Jason, you mentioned Clubhouse, and I'm always trying to be cautious not to tread the legal line, but why is there a difference between advertising on TV during a Reg A and just saying something like learn more at investinrise.com versus promoting yourself in a webinar, a pitch event, or Clubhouse, and just having a discussion and say, well, we're actively fundraising, but come to our website to learn more?
Well, just like you're doing it right now, Tron, you can say whatever you want right now until you go live.
Yes.
So when you go live, the SEC has a very different view of it all. And I mean, look, I agree with all of us. We're trying to figure out, but I think what it comes down to, and please, Itan, I mean, you've seen this, what it comes down to from the SEC perspective is the following. When an investor is making an investment decision, they are required to have right there in front of them the accessibility to the offering document, which is the link to EDGAR. So on television, that is the problem. There is no way. Now, there are new televisions. Granted, I am one of those where I could see a commercial and I can go to my screen and touch it and boom, it automatically, I got it. But I think the SEC is going by 90% of people do not have that TV. So Itan, I'll leave it to you.
No, it's right. We have all of our issuers need to run all of their marketing and promotional items by our compliance team for review in advance. And like you said, Oscar, you're right. When something is done on TV or an informal means, it could be challenging, right, to do that. There is an exception, right? There's I'm a big fan of my brother Darren Marble. He's running planning a series called Going Public that's going to be streaming online. So it's not necessarily TV, it's online, and that gives you more features to make this offering circular available to viewers, right? So there are exceptions, and there's differences between traditional TV and kind of internet generated streaming shows as well. But ultimately it comes down to protecting the investor, making sure that they have access to the diligence, to the disclosures, to the disclaimers that they deserve to be able to see prior to making an investment decision, right? And that's really the root of this discussion, of this analysis.
Thank you for that. And that there are ways of doing it, but that's why I brought it up, because I know everybody's talking about it now, and there is a company. That's why I got wind of it. And I've seen it, and I've been having the same question. I brought it to Sarah Hanks. I brought it to a few lawyers. I'm sure you have as well, Don. And she's pretty black and white. She goes to Oscar. They say this, but see that bottom part right here? That's the ambiguity. And I don't know if you want to play with ambiguity with the SEC. In particular, when the only outfit they give out are orange. So, all right, Roland, you got a question for us.
Hi, can you hear me?
Yes, you're on.
Yep. Well, maybe we can help in that aspect, talking about connected TV, because that's what Info is all about. So we can embed those ads with a code. If you have our app, you can actually connect with that ad instantly. So it's like, it becomes from an analog or offline channel to an online channel, so people can instantly connect to the offering page, which is similar to any digital environment. So I don't really see the difference, given that we can instantly connect them to the offering document.
Listen, Roland, a great point. Thank you for that. And it's great to see products that are coming out to solve the problem. The issue, I think, what everybody should hear here, we're all for it. Itan, I think you would. Why would we not want you to have that exposure? It's not about whether we don't want to allow it or anything like that. Whatever you do, whatever lawyer you're working with, there's only a handful of good lawyers in this ecosystem that will protect you. And try to understand this is about protection. So if they feel uncomfortable, and if the broker dealer doesn't feel comfortable with it because it puts them at risk as well, then these are the issues that we're dealing with. We need to satisfy the SEC. And so whoever's got this technology that can show the SEC that while Jason Fishman is sitting at home watching ABC News, right? And he sees something and he can instantly get the offering from there. If we can demonstrate that, hey, listen, I'd be all for it. I'm sure we all would. So welcome that discussion. All right, Francois, you have another question for us.
Maybe stating the obvious here, it'd be great to have your respective contact information at the end of this seminar.
Sorry, can you say that again?
I would like to have the contact information of the speakers to this webinar at the end of the call.
Oh, yes, of course. You'll be getting an email, all of you. You can reach it down. Actually, if you guys all want right now, you can go to www.KoreSummit, KoreSummit. Click on speakers. His bio is there. His email address is there. His LinkedIn link is there. And it is there for Jason Fishman as well. So listen, we're trying to bring this to make it easy for you, not to, it's easy. It's all of it is in public information. So your journey as an entrepreneur can get there quicker. So, all right. Are there any other questions? We're getting, I think we've answered. Look at that. We actually came on time. We answered all the questions. Obviously, where I'm going to leave it off, obviously, I think, if I'm understanding this correctly, I mean, what's happened in the other webinars, a new topic has emerged. What I think is here is advertising. We touch on it a little bit, but I think we need to expand that conversation, because I think, as our friend Roland brought up, there is technologies that we weren't aware of that could help this. And if we could be the first ones to bring it to the SEC, hey, this is, I don't know about you, Jason. Do you think that'll help or enhance your offering when you tie that in together with the digital ads you're doing?
100%. And to Trung's question, looking at Roland's points, we always start with that competitor marketing audit that I was mentioning before, looking at the format for how other RegA Plus campaigns have done it in the past or similar type of offerings, taking that to a compliance conversation, as Itan is mentioning there. It's always good to be able to look how others did it before and taking their findings into it. Clubhouse was brought up. Look how those rooms are being hosted. Look how conversations are taking place in the equity crowdfunding rooms about it on a day-to-day basis. Look at how you could send invites to investors or strategic partners and get them involved, have all the groups involved in your offering. And Oscar, that's one of the things I love about Core Connects and what you guys bring to the industry is this community. You mentioned 22 people on a call. Use these resources at your hands. We all want you to be more successful. If an issuer gets in contact with me, whether they're working with us or not, I'm going to give my insights. I'm going to give my recommendations. I want to see more success industry-wide. And the community goes beyond just advertising on the marketing side. There's Eric Fishgren, Fish Tank PR. There's all these other areas of the table. Oscar even says at one point in a RegA Plus campaign, you're going to want to talk to, if not use, all of these different resources at hand. We want to see more 50 millions like with Itan's doing and coming up right around the corner, 75.
No, agreed. It is truly the most wonderful team sport you will ever have, and it starts here. All of us working together, and more importantly, seamlessly together, because it's all integrated. Tom works with the Jasons and the Oscars and the Sarah Hanks. We all work together. So you're going to find that this ecosystem, I remember when it first got started, it's fairly small. There's about 192 now players in it. So there's a lot of different choices, but at the end of the day, all of you will be working with, in particular in the investor acquisition. I don't know one yet that you'll just be working with one. There's so many great specialists, and I think there's so many new great specialists coming. So listen, Itan, Jason, thank you for a great conversation. Our audience obviously enjoyed it. They ended up coming up with more great questions, which a new webinar will be created just for that on advertising. I want to thank everyone for coming out today, this morning. We obviously have another webinar this afternoon. How do I know if my company can use Reg CF? This is going to be another, again, we talked about Reg A. Reg CF is another great exemption. We'll see you at 3:30. Thank you so much for being here today. Have a wonderful week, everyone.